Hi, I'm Vanessa from Premier Tax Solutions, and in this video I'm going to go through 10 ways that you can save tax. The first way is pension contributions. These are a very tax efficient investment if you're a basic rate taxpayer. HMRC tops up your contribution to your pension by 20%. So if you contribute 80%, then the government tops up with the final 20%. So if you pay in £80, the government will pay another 20 in, and that makes the contribution £100 in total. If you're a higher or an additional rate taxpayer, then you can claim the difference between the basic rate of tax and the 40 or 45% rate of tax that you're currently paying. The way that you do this will depend on the way that you currently contribute to your pension. The second way of saving tax is by using your ISA allowance. You can invest up to 20k a year in an ISA, and any growth that it receives is tax-free. So whether it's stocks, shares or cash, you can make money and not have to declare it to HMRC. Don't forget this 20k allowance is split across each of your ISAs. The third way of saving tax is by using EIS investments or SEIS investments. So continuing the theme of investments, have you heard of EIS investments before? These are quite different in the way they work. Normally you get tax relief on something, but EIS is known as a tax reducer. So say you wanted to invest 100k, the tax benefit that you can claim, assuming that you qualify, is 30% of your investment, which in this case would be 30k. You can then use this 30k to reduce your tax liability, so it's very generous. There are also CGT benefits for when you come to sell your shares. SEIS investment comes with a 50% tax reducer. So taking that 100,000 investment, you get 50k as a tax reducer. The reason that the tax relief is so generous though is these are usually high risk investments. We are not financial advisors here at Premier Tax, so if you wanted advice on investments, then you need to speak to an independent financial advisor, also known as an IFA. All we can do is talk to you about the tax effects of these investments. The fourth way to save tax is by using your personal allowance. Everybody in the UK can earn up to the personal allowance and not pay any tax. And when I say everyone, that even means a newborn baby. So if somebody in your family is not using their allowance, I'd suggest that you look into that. Currently it's £12,570. The fifth way to save tax is by using your dividend allowance. Currently, anybody can claim the dividend allowance and not pay any tax no matter what their income is, and it's currently set at £2,000. The allowance reduces to £1,000 from April 2023 and then £500 from April 2024. That's how it currently stands, but you know, the government might change their mind. The sixth way to save tax is by using your annual exemption. This relates to capital gains tax. It means you can make capital gains every year up to the exemption and not pay any tax on it. The current exemption is £12,300. There are exemptions from capital gains on things such as cars, horses and lottery winnings. They are just to name a few. The seventh way of saving tax is by using capital allowances. These are usually claimed in businesses on capital assets such as machinery and cars. Capital allowances let you claim tax relief on the cost of an asset. These are at a set percentage each year and are currently at 18% and 6%. There is something called annual investment allowance, which allows you to claim 100% of the cost of the asset in the year that it's brought into use in the business. This is usually when it's purchased. The annual investment allowance changes from time to time, but it's currently set at £1 million a year. The eighth way to save tax is gift aid. When you make a donation to a charity, you usually ask, do you want to gift aid it? That's because making a donation to charity is tax-free. By completing the gift aid information, the charity reclaims the tax back from HMRC. If you're a higher rate or additional rate taxpayer, then you can claim the additional relief yourself. The ninth way to save tax is by using the marriage allowance. Obviously to use this, you're going to need to be married. If you're married and one spouse is a basic rate taxpayer and the other spouse doesn't use their full personal allowance, then you can choose to gift 10% of the allowance to the basic rate taxpayer. This in turn reduces the tax bill and saves wasting your personal allowance. The 10th way of saving tax is by using electric vehicles. If you've got a business, it can be a sole trade, a partnership, a limited company. Having an electric vehicle can bring additional allowances over a petrol or diesel vehicle. If it's a new and unused electric vehicle and you purchase it, not lease it, you could claim 100% of the cost as a first year allowance. If it's leased, there's no restriction on the lease costs claimed, and you can still claim 50% of the VAT if it's a car and 100% of the VAT if it's a van. For company vehicles, an electric van has no benefit in kind, an electric car has a 2% benefit in kind, and there'll be no fuel benefit because there's no fuel because it's an electric vehicle. So you can see that with an electric vehicle, the benefit in kind is a hell of a lot lower than having a petrol or diesel vehicle. On an average petrol car, it might be that the benefit in kind is at 16%. On an electric car, it's only 2%, so you can see the difference. Hopefully you found these 10 ways to save tax useful. If you've got any questions and like to see how it can apply to you, then get in touch. Thanks for watching.